Good morning, everybody. I'm so happy to be hosting you today for our inaugural ADGM Digital Lab Demo Day. Now, my name is Gabrielle Inzirillo, and I'm the Head of Market Development within ADGM's Financial Technology Unit. I will be moderating a few sessions today, so I'm sure the audience and myself are going to be the best of friends by the end of the day. Now, to our lovely panelists who have agreed to join us today, I'm really excited to have you here because we're really thrilled to talk about your experience as founders and how you see the digital lab environment is going to enhance the way you interact with the environment. Now, before we really kick it off, I think it's best to get to know you a little bit better. I'm sure the audience and myself are very keen to know what are the big things you're working on. So we'll do a little tour of the table, as to say, the virtual table. And it'd be great to know exactly who you are and what amazing thing you're currently building. So in that case, to start it off, can I ask Vadim to go ahead and introduce himself?
Hi, everyone. My name is Vadim Sobolevski, and I'm the co-founder of FutureFlow. FutureFlow is a RegTech solution that helps financial institutions and regulators to monitor the flow of funds in the financial system. It helps multiple institutions to understand where the money comes from, where it goes, what transactions it has been used in, etc. It's essentially a way of trying to extract intelligence about the way the economy works without spending too much effort studying the actual entities that transact. Instead of studying the entities that transact, we study the actual funds that are being used in transactions and try to extract intelligence out of that information. Our technology can help financial institutions and regulators in use cases relating to monitoring financial crime, monitoring systemic risk and liquidity in financial system, and other use cases. We've been around for a few years. Just recently, we completed our first real-life pilot in the UK, which connected 3 large financial institutions in the UK with the system essentially producing fascinating insights about various linkages and relationship structures that exist in a real-life environment. So we're very excited about bringing these solution elsewhere around the world and deploying it either in live or testing environment in various jurisdictions, such as the Gulf region. I'll stop here.
Awesome. Thank you so much. Izhar, can I ask you to go next?
Yeah, of course. Hi, everybody. My name is Izhar Arieli, and I'm the CEO of Tenure and one, of course, of the co-founders. What we're doing in Tenure is that we're building an infrastructure an infrastructure platform that enables creating and running a smart, controlled, and transparent corresponding banking relationships, which can be domestic and cross-border. It doesn't matter for us. And the challenge we're solving is that banks and financial institutions today want to process and actually execute more and more wire transfers between them. However, because of how wire transfers are being processed, they lack the ability to properly and efficiently manage the risk associated with these partnerships, and therefore we're giving them a platform that can solve that problem. We started the company last year, the end of last year, in August last year. Until now, we raised $1 million, and we have about 7 clients already. We're going to be live with the first 5 clients on April this year. So this is us in 2 cents.
So you're super new then.
Great,
yes, awesome. Nicolai, can I ask you to go next, please?
Hi, everyone. My name is Nicolai. I'm the CEO and founder of Synthesized, and Synthesized is a data access platform powered by machine learning that solves the problem of collaborating on sensitive data safely without losing speed. We are based in London and growing rapidly in the UK, Europe, Middle East, and increasingly in the US.
Prompt, love it. And last, but absolutely not least, Shane, please tell us a little bit about yourself and what you're building.
Hi there. So I'm Shane Reidel. I'm the CEO and co-founder at Elucidate. We're based in Berlin, and we're building a risk quantification platform targeting financial crime and compliance risk. So think of it a bit like Moody's, but for financial crime. Our application with financial institutions tends to be twofold. Either they're using our platform to automate their own risk assessment process using our regulated model. We're regulated by the BaFin and the ESMA as a benchmark service provider, or indeed they're using it to assess the risk of their counterparty relationships in order to reduce friction between banks in correspondent banking and other kind of counterparty relationships. So that's what we do.
Super cool. Now, Shane, stay with me because I'm going to have you kick off the first question. Now, I'm guessing you all agree that you're not out there to disrupt/replace big banking here. Every one of you is offering a service that's an enhanced, an add-on. It's really a value on. So you are looking to go down the collaborative aspect of working with the existing financial sector and really helping out on that front. So I guess my first question is going to be, we do constantly bring up, this point that collaboration is really key to, getting to that success, getting to that point where, you have a number of clients. And so I want to ask, it still remains that the path to traction, it's still quite difficult. It remains fraught. In your experience, what are the issues that you faced to getting the adequate buy-in that you need to actually deploy your solution? Shane, kick it off.
Yes, well, if there's an easy answer to that question, I would happily hire the person who can give it. I would say that you're spot on when we're talking about selling an enterprise space into financial institutions in particular. And for all of us, we come from various aspects of kind of the regulated space as well, which adds further complication to it. Frankly, there's a misalignment of incentives, I would say, oftentimes within our customer base, and the banks and financial institutions generally aren't structured for risk taking in this particular way around technology. I think it's always an interesting manifestation, for example, in financial institutions when you see that they have a department for innovation, which often sits quite separate from everyone else in the bank, as compared to seeing that embedded into various functions. That said, what the approach that we've taken to address this problem is really to take it in steps. There's often a lot of space for companies like ours between the user and the buyer, and there are often multiple users within an institution. So, it's a long and sometimes painful process of convincing various users of the application of a particular technology for them, and then taking the additional step of empowering those parties to go and make a case to the various buyers within the organization. One has to come into this space though with a lot of patience, and frankly, domain knowledge is also really useful, in order to navigate what is really quite a challenging sales environment.
I mean, if it wasn't easy, if it was easy, somebody else would have done it, right? So that's
sure.
you just have to keep telling yourself that. Izhar, you were nodding your head. Do you want to add on top of that?
Yeah, of course. As someone that had a lot of experience selling to financial institutions in the past 10 years, I think that there are a few things one can do to ease their ability to create partnerships. The first one is to design a product in a way that answers two needs. First, the stakeholder needs, which means that your product should highlight and improve the work and results of all stakeholders that need to approve your solution and getting it into the financial institution. And the second thing is to build your product in a way that you will need as few stakeholders involved as possible. So this is number one. The second thing I will say is that building your pricing in a way that doesn't interrupt or change the existing methodology of your partners they have to date. This is truly important, and it should be very straightforward to explain and aligned with other products they're using already. Lastly, in that regard, you should build it to be very easy to calculate and without any changing of the reporting or how they calculate that. Lastly, last point regarding this question is, I think that the best thing is to build the incentive for your partner that makes sense and giving them the answer for different scenarios and not just for something specific. So if you're working with, I don't know, your client is your compliance officers, and you build it based on the methodology and what they need and how they're showing success and so on and so forth. Nevertheless, you need to give them the incentive that is related to them and that is could change between a framework that will answer a lot of different needs when you're trying to do these partnerships. So this is my 2 cents.
Fair enough. I don't know why we bash compliance teams so much. I love working in compliance teams. I mean, they're like everybody else. They're trying to make their lives easier too, right?
I'm with you. I love compliance. It's not. I always started in my previous company. I always started saying in every lecture, I love technology and I love regulation. And then half of the people went out, and I knew that I'm always with the right people. So this is how I did that.
Okay, we're gonna put that aside, Vadim, Nicolai, any points you'd like to add on?
I fully agree with Izhar's point about stakeholders and pricing. In my opinion, also the availability of high quality, safe to use data is key to effective collaboration, and it's a major issue right now. So we've seen it been significantly limited with large organizations in the financial sector, which inevitably affects successes of joint ventures and initiatives. So we've spoken about compliance, and we've seen complex internal data privacy and data governance policies being adopted due to a myriad of external regulatory controls like GDPR we have in Europe and HIPAA in the US. So in fact, data movement constraints are now found in nearly every country. And compound this with the ever-present compliance risk of data breaches, and we have sufficient reason for ever stronger defensive positioning when it comes to accessing and collaborating with data. And not surprisingly, this led to a risk-averse culture when it takes weeks or even months to secure data approvals, leaving data, ideas unrealized and innovation delayed. Well, just to give an example, so with one of our clients, it took about 4 months just to initiate a pilot because data was really difficult to collaborate on. So there was a number of stakeholders involved, to Izhar's point, and it was really convoluted process to engage with the client.
Yeah, data. It always sort of comes down to data, not just when it comes to when you look at all the different aspects of a pilot and how to actually get banks involved. Nicolai, let's stay on that point. And Vadim, I'm going to put you on the spot right after this, so get ready. So data remains to one of the most contentious points with financial institutions, right? You have to get it, but then how do you get it? And can they give you access? And is it the right data? And are they allowed to give it? And what risk can potentially be can arise because of them giving that to you? So it remains a pain point. Everyone needs it. It's the oil of the digital economy when it comes down to it, but it remains a major blocking point. And so I guess the next question is going to be, is the availability or the quality put at disposal of the data that's there, the quality and the availability that we have, as a major blocking point? Can we remedy and undo this blocking point, sort of make it easier to access, easier to use this data and get to it without people, quite frankly, freaking out?
Yeah, so indeed, so one of the biggest challenges in data science that is limiting innovation today is having access to high quality data sets. This is currently blocked by 2 things. So it's privacy regulations, as we've discussed, and also technological restrictions. So data locked in complex siloed data environments, especially within large financial the organizations, and sometimes governed by legacy systems, they don't easily interface with latest technologies. Without immediate access to data, AI applications and machine learning models are delayed and also limited. Well, as all of us here understand, machine learning models are only as good as the data they're based on. And therefore, data quality, as we discussed, and data coverage are vital to ensure the high performance of machine learning models when they're deployed to production environments. Before building actual models, data scientists spent up to 80% of the time, and probably more, and lots of effort getting the data right, understanding the underlying relationships and ensuring the data is representative of the use case and ready to be used. So if you think about a 4 months development cycle of a machine learning model or a data science task, over 3 months of that would be spent on essentially making the data right for development and experimentation purposes. Well, our platform uses sophisticated AI technology to create intelligent, bias-free, synthesized data products in just under 10 minutes.
Okay, very good selling point. I like it. I guess when it comes down to the whole, machine learning aspect and building up good algorithms, nothing is truer than the old adage of you are what you eat. Vadim, on the spot, please tell us, how do you feel this whole relationship with data is with financial institutions, and how can we unblock it?
Well, here I just want to highlight the role of the regulator, and I think it also goes back to the first point that you raised. Again, I'm sorry to put you back on the spot, but I didn't mean to do that.
We'll do tennis.
I think, yeah, exactly. I think the regulator is increasingly playing an important role in this paradigm because, first of all, going back to the first point, the presence of an activist, so to speak, regulator or proactive regulator, first and foremost solves the problem of improving collaboration, right? Because going back to the first problem, we usually face two common issues in making multiple financial institutions collaborate. The first problem is this idea of necessary versus sufficient, especially when it comes to areas such as risk management, compliance, etc. Financial institutions usually think in terms of sort of the things that they're required to do and usually shy away from the things that they don't really have to do or the things that the regulator does not ask them to do. The second point is the first mover, right? And usually financial institutions, as has been said earlier, tend to be conservative, and so nobody really wants to be the first mover. Even though everybody wants to follow an interesting initiative, it's rare that one financial institution would be the first mover, the pioneer. So in our experience in the jurisdictions where we found innovation to be moving faster than in other regions, it's usually the regulator that plays a key role in solving those both points. And when it comes to your second question relating to how do we access the data, how do we essentially unblock the data being stuck in various financial institutions, etc., this is again an area where the regulator can potentially play a crucial role because it's a common trusted party, right? And that's something that many financial institutions underappreciate, because when it comes to cooperating with organizations like ours, they make a false assumption that we actually need access to their data in order to help them make sense of it. And that's not true, right? Platforms like ours or organizations similar to us don't actually need access to the data. That data can be elsewhere. And the financial institutions can collaborate securely without sharing their data with each other by simply having something in between. And in our mind, regulator, a technically savvy and sophisticated regulator, plays a crucial role here. And I think this is why we're so excited about the prospects of the digital lab.
Thank you. Well, now that you've thoroughly put all that weight on our shoulders, I am going to ask Shane to, give us a little bit of input. I saw you nodding your head there, so tell us a bit more.
Shane, you're on mute.
I completely agree with the points that were raised. My agreement is only there. I think the conservative nature of institutions has often manifests itself in sort of folks trying to find reasons why you can't do things, as compared to necessarily weighing the benefits of doing them. So we encounter that with legal departments quite a lot. For example, very conservative interpretations of data privacy or outsourcing rules. And one tactic I think that we've taken, or that our general counsel has taken, is really to be quite proactive in engagement with those parties, so that we're not allowing a void of information to manifest itself in hesitancy or reluctance, but rather sort of saying, we don't believe that this is outsourcing because of X, Y, Z, or here are the various ways that we can go about performing data transfer or synthesizing data or anonymizing data so as to allow it to be useful to them as an institution, without necessarily sort of opening up their books entirely.
I guess fundamentally it's always a balancing act. I guess ultimately, and for those of you who know me, I've always been very, very keen on trying to make the implementation process as easy as possible, right? I live and breathe this stuff. And so when, ADGM started building and, when we started really structuring out the idea of the digital lab, it was really conceived that as a neutral digital environment that could essentially accelerate the procurement process, because the idea was being able to test the solution in a neutral, safe environment, build out that business use case that can then be brought to the appropriate stakeholder and say, hey, we know this work. We tried it. We did it in a place that was secure, it's safe, that was done outside of the bank, so it didn't touch on anything sensitive. Now that we know it works, can we have the buy-in? ultimately, I guess my question is to you is, do you feel there is a need, a tangible need for something like this? I'm going to open the floor. Who wants to go first?
I can go first, and maybe touching on Shane's points about data anonymization, data synthesization. So it's a lot about the technology, but also, so we need not to forget about the data infrastructure. And absolutely, from our experience, data practitioners, data users look for a secure infrastructure, secure sandbox environments that allow them to quickly access and use data for training and testing purposes. They want to be able to experiment, innovate, and deliver value to the business much faster and in a safe, privacy-preserving manner. And a safe data collaboration space like the digital lab is key to that. Even more when working with partners, third parties, and innovation technology solutions providers as well.
Fantastic.
Yeah, I would just add to that. I think one of the big challenges in engaging with financial institutions is that you sort of have a chicken and egg problem oftentimes. I don't want to go through the process of due diligence and onboarding until I know that there's a thing there, that there's a robust business case, but you can't make a robust business case until you've gone through the due diligence and provided data. So, to create this ecosystem wherein we're able to, with minimal investment on the part of the financial institution, to demonstrate that business case, that value add to the institution, I think is a fantastic template. It's a fantastic approach and a template to be replicated elsewhere.
I have to agree. I think that what you're doing in the ADGM is something that is incredible. It allows, fintechs like us to be actually connected to financial institutions for one place, giving them the ability to do proof of concepts and of course, checking our technology, seeing how it works and getting, all the actual information based on data they can see. This is the reason that we joined as soon as we could to your ecosystem, and we would love to have partners connected to us through that.
I'll just close by saying there's absolutely a need for this. If you think about what you're offering, which is essentially a combination of a trusted neutral cloud and data, potentially, this is the magic that all financial institutions need, because this is not something that they can easily achieve by somehow magically working together.
I mean, collaboration is tough, right? Now, last time I checked the amount of people we have in the audience right now, it was quite substantial. And I know we have quite a few financial institutions that are tuning in today. So I really, really hope to those that are listening right now that you reach out to all our founders that are here if you like their pitch. Now, going to our final question, and this is the question that's really going to wrap it up. So you all operate in various jurisdictions. Izhar, you're based in Israel, but Vadim, you're in the UK. So you guys are maybe geographically separated, but you still operate just across globally, right? You are global players. And so my question is, where does regulation play in all this? Because you see different regulators doing different things. You see different jurisdiction. Do you think the regulator has a duty to innovate? And should really a regulator be pushing to onboard RegTech solutions, for instance, themselves? I guess that's my question. It's a little bit, to be honest, this is actually a little bit of a touchy question, because I know on a global perspective, some regulators are maybe don't think it's their role to be implementing technology themselves, as opposed to just overseeing it. So I'd love to hear the on the ground perspective.
I think that the regulator should facilitate the testing solutions, actually, again, as you did, and by that create regulations that can actually be checked through the tools that he's providing. So the regulator, in my opinion, should try to innovate, and not try to innovate, of course, by itself, but create rules that will push the actors to innovate and then check them and their solutions to validate the answer if it answers the regulation. And with that, you can actually push innovation, facilitate innovation, But again, as a regulator, you will not need to take a position, and this will free you and push the market forward.
And the line between RegTech and SubTech in my supervisory technology is a very fine one. Many of the solutions in RegTech are applicable in some slightly varied manifestation in the supervisory environment. We know from looking at the environment, only about 27% of regulators are using any kind of technology right now to implement their regulatory priorities. And whether you are kind of the FCA with 25,000 entities that you're supervising, or you're the Central Bank of Angola with 33 entities that you're supervising, you're always resource constrained. So in that environment, the deployment of strategic technology solutions, I think is not really an option at this point. I think it's an absolute requirement for these markets to remain sort of engaged in international financial markets.
Yeah, and maybe touching on FCA, so indeed regulations do play a key role in the ecosystem, defining the principles organizations should follow in their day-to-day practice and providing various recommendations regarding the onboarding RegTech solutions. And we definitely believe there is a real opportunity for regulators to also partner up with industry practitioners even more, while of course defining the safeguarding principles. And with FCA, so we had the pleasure to collaborate on an industry initiative focused on building the so-called better synthesized products and better synthesized transactional bank fraud models. And as I think mentioned, so we solved the problem of collaborating on sensitive data safely without losing speed. And we are able to provide a highly representative synthetic data product in just under 10 minutes. And that was a great result of collaboration between the kind of industry leading regulator and the fairly sort of mature, I would say fast-growing company in the UK. What we also believe is that in the fast-paced economy, where innovation is crucial, regulators step up from being an enforcer to becoming the enabler. And this is very, very important.
In our experience, we've certainly seen a range of regulators in various jurisdictions around the world with very varying risk appetite, if you will, when it comes to innovation.